Hello, my name is Yuya Shimizu, Chief Investment Officer of Hibiki Path Advisors, investing into Japan's small and mid-caps with an engagement and activist angle. In my previous video, I explained about a small-cap hidden gem company in Japan called Aoyama Zaisan Networks, and how we have been engaging with them and how they have been transforming over the past 2-3 years. So, similarly, in this video, I would like to introduce another hidden gem company called Star Mica Holdings. It is a used condo reseller business, and we have been engaging with them past few years, and we actually sent a letter to them in November last year, and we received a response recently. So I'd like to tell you about how things have evolved with Star Mica. So here we go. Here we start with a brief introduction of Star Mica itself. So the company was established quite recently in 1998 by current CEO Mr. Mizunaga, and they are in used condo resale business with the top domestic market share. The uniqueness of Star Mica compared to other condo resellers is that they actually also buy condos that still the tenant is living, and they appropriately price it, purchase it, they run it, and after the tenant leaves, they renovate it and sell it to another consumer. Not many condo resellers can actually do that because they need to, first of all, price it appropriately, then secondly, they have to run it while the tenant is there. So the know-how and wisdom is very different from just buying a vacated condo units. So with that, the business has been growing very nicely. This year, for example, our company expects their revenue to be about 50 billion yen. 10 years ago, it was only 12 to 13 billion yen. So you see how many multiples it has grown over the years. But, however, the market appreciation has not been that great. Current market cap, 21.4 billion yen. Price to earnings ratio, 6.9 times. Forward. Price to book, about 1. Although the return on equity is, for example, the previous year was 17%. Current year, where the company estimates are very conservative, estimating for declining profits. Still, return on equity estimate is 13%. It is a decent business with decent return on equity, trading at 1 times price to book. And that is one of the reasons we are shareholder of this company. So, actually the engagement activities goes back to November last year, where we sent letters to 3 different condo reseller companies. One is Star Mica, the other is Intellex, and the third one is eGrand. In the letter, I have explained in detail my view about the market and the reason why we own the name. I wanted the CEOs of these companies to know why I bought the stock. And in the letter, of course, it is a proposal. I have made 3 proposals. One is that they should all change their branding about the business not like condo reseller business, but make it sustainable housing business. The branding matters in terms of image of people. The second proposal is consider the industry consolidation. So literally I'm saying you guys should merge with each other. Pretty aggressive, I agree. The third proposal is asking for management buyout. I usually tell these companies, investee companies management, that if you are publicly listed, you should aim really high and face the market to maximize your corporate value, which means maximize your present value of your corporate value, which means the share price. Or if you do all sorts of things and sadly market doesn't realize you, you should go private by conducting an MBO. After doing such discussion for a long period, for example, one company, it used to be one of the top holdings in our portfolio, called Ihara Science, the code number 5999, actually announced the MBO, management buyout, in February, and they are going private. So, we believe the premium was not enough. We actually made a position clear in a public letter, but still it went through, and the company is going to live as a private company, which I respect, making a very big decision so quickly. So I've been saying these things to many of my portfolio companies, including Ihara and company like Star Mica, where the corporate actual value and the stock price seems to have some sort of a disconnect. After sending the letter, I actually called up 3 companies and explained my thesis directly to them. Why I feel the real estate sector as a whole is going to be such a discount, and why they need to appeal that they have a very strong and unique business as a condo reseller, and they have to show off a little bit more about the fact that they're one of the leading companies to fulfill this ESG wave in the society. And of course, I told about this industry consolidation and management buyout, etc. After that, Star Mica, Intelex, those 2 companies, we've had a few interactions in a meeting, but a company, eGrant, had no response. So, unfortunately, they are not in a position to have a constructive discussion with the shareholders. After this discussion, Star Mica, Mr. Mizunaga, mentioned that they would like to respond in an official letter since I've sent them an official letter, which is very sincere. So, on 5th of June, we received a 4-page response from Star Mica, and that is why I would like to talk about this in my video today. But first of all, let's look a little bit about the earnings trend of Star Mica. So this is the operating profit of Star Mica for the past nearly 15 years. So in the first 5 years, the operating profit was floating around 100. Sorry, this is in millions. So 1 billion to 2 billion yen. After that, the earnings has been steadily growing, except for this COVID period, of course. And last year, November 22, they had a record earnings of 6 billion yen operating profit. This year forecast, company is estimating that to decline a little bit to 5 billion, but still I believe that is a conservative estimate, and the company can still enjoy structural growth in the market. You see, return on equity has been in double digit, mostly, except for COVID time, for the past 6-7 years, and we believe it is a compounder, and that is why we own it. However, sadly, this is the valuation, price to earnings ratio and price to book ratio, both the cheapest in the past history. This is pathetic, but there are so many small to mid caps like this in the market in Japan. So, Star Mica is doing everything right in the market. Their top one market share. Return on equity is decent. However, the price to book is like 1 times. Lowest level in history. So that's the current situation in the market. So here is the letter we received, response letter, in Japanese, of course. There are actually 4 points written there. They ask us to not disclose to public, so I would like to explain in my own words how I felt about these 4 points. So first of all, the fact that they sent us an official letter, I am grateful that they are facing these investor requests and proposals in a sincere manner. And the first point that I've been mentioning is pretty clear that as a public company, they would like to communicate with shareholders with utmost sincerity and take any advice that's helpful and increase their shareholder value. And that is a very standard but an optimistic, proactive response as a public company. Second is about the branding. They are saying that, of course, people can just say we are sustainable condominium provider, but that's just by words. So they want to be very certain that there's data, evidence that it is really sustainable, and they are actually making that currently. So with that said, they want to come back with a very strong solution and strong presence to be a sustainable player, but they want to be credible at the same time. Well, that is a good approach, of course. The third thing is about the industry consolidation. Star Mica hasn't denied it in their letter, but they say, of course, it is a very big judgment, and they have to be carefully assessing the variable risk of business combination. So, in my impression, they are not denying, but they're not aggressively wanting to do it, which is fine. The fourth point about the management buyout. Star Mica, of course, mentions, simply speaking, we cannot be an insider, so they cannot, of course, say we do it or we won't do it. But currently, they say that they are not considering officially about management buyout. They want to face the market seriously, and they want to raise the corporate value, which is great. Now we know that they are inclined to raise their corporate value, i.e. share price. It doesn't say officially, but they are clearly also frustrated with the current market valuation. So, another thing that there were some substituting comments, additional comments from Star Mica about how they see the market and how they perceive themselves. So here I just mentioned about these 3 points. 1, the Japanese housing stocks are increasing, and the vacancy rate of these housing stock is about 13.6%, creeping up. And their business, condo resale business, the value in the society is very high. They feel that, they acknowledge that, and they think that they're doing the right thing. And secondly, in terms of market environment, the housing starts in Japan in 2021 was around 870,000 units nationwide. And this is estimated to go down to 490,000 units in 2040. Of course, due to the decline in population. But the total size of used residence purchase and sale, the market transaction, is estimated to go up constantly, which is that Star Mica and these businesses have a tailwind in their business environment, which is great. The third point, they have been always saying that they want things to be valuable. They want to reuse it rather than make it. And that is really a sustainable society. And that is their core business. And the world is starting to catch up with their core value and philosophy of running their business. So they're very excited about the current market environment and where the society as a whole is trending. So these are pretty upbeat and optimistic assessment about their own business, which I valued it very highly as well. So finally, our stance on Star Mica. First of all, we acknowledge that the market is concerned, even in Japan, about the potential rise in interest rates and more structurally, the decline in population. So real estate stocks or REIT stocks have not been performing well in current market circumstance, unfortunately. In such circumstance, the key of differentiating is how they can constantly and sustainably grow the business. It is about the business model, how good they are, the business itself, how it can solve the social problems, like the vacancy rate of Japanese housing stocks. And third is about the capability of the management. In this engagement and the engagement activities that we have been doing with Star Mica over the past few years, we believe that Star Mica matches all that criteria. Still, we acknowledge with frustration that the market doesn't see real estate or REIT stocks as a good investment right now. But as, for example, if Star Mica can demonstrate the constant growth in their book value per share with their reasonably high return on equity, and if the market acknowledges that their value in this current ESG direction, Star Mica can be differentiated in many, good ways. So it's still a headwind for Star Mica itself, but with this response letter, we are personally convinced that they can make their way through the headwind. So here was one of the example of another hidden gem in the market and how we engage with these companies. Thank you very much for listening again. This was Yuya Shimizu of Hibiki Path Advisors. See you next time. Bye-bye.